Hey everyone. It's we're back with another episode of This Week in Real Estate. It's Conrad Zerini, broker of record with Remax Escarpment. Brian Hogbin. Are you guys called brokers?
Yeah, I'm a mortgage broker.
Broker owner of Mission 35 Mortgages.
Yeah.
And I am stepping in for my dad, Rob Golfi. My name's Phil Golfi, and welcome to the show. Good to see everyone. What do you guys want to talk about today? Want to talk about Florida?
Oh, yeah. We want to talk about the sunny South. You know, lots of changes down there. People are... What are you seeing, Conrad, down there? Because I know we saw an article in the paper there about people selling their properties right now. A lot of people looking to sell because of the currency exchange, and maybe a good time to cash out.
Yeah, you know, you got that unperfect storm for the snowbird kind of thing, right? So coupled with the dollar just plummeting. But you see, I don't know if you guys remember that Champlain Towers that went down in close to Lauderdale. It collapsed. Well, after that, every condo had people in there, and there were city ordinances and the whole nine yards. So what that's meant is huge assessments. $50,000-$60,000 US assessments. So that's close to like $1 million Canadian. No, but you know what I mean?
Yeah.
So you got that. The other thing is the uninsurability. The other piece too is like everybody's on the water. Now they're all kind of moving inland. So there's a thing happening. Because it's funny. I'm glad we're talking about it. I was just in Palm Beach just talking about this very topic last week, a week ago, almost today. And again, that they're moving away from the water and inland, and you're starting to see stuff inland, but close to the water, but not, like Goldilocks distance from the water, that they're saying, that people are buying, and that's starting to inch its way up. I think you're going to see some knockdowns because there's some big lots, and I know Southeast Florida quite well. There's some big lots, like quarter acre lots, 10,000 square foot lots, and even larger, that you'll probably see some knockdowns happening, and it'll start to come away from the water, because insurance right now
It's crazy.
It's crazy. I don't know. I saw this thing about the Fontainebleau pays about $85,000 a day in insurance.
Wow.
Wow. So think
how's
about
that for
one.
overhead? Eh? Put that on a balance sheet.
Yeah.
So, and I think that's part of it. That insurance piece, the assessments, and even the cost of living. Like, if you're going to live down there 6 months to a year, or like only 6 months, it's with the dollar exchange, it's becoming impact's very impactful.
I know. I was talking to Phil about that. Like our philosophy was always, if I could end up having the rental income cover, and I think a lot of snowboards think that way as well too, where they think, hey, if I can have the rental income cover, I can go down there and subsidize my retirement place. That happened to me for the first 3-4 years, but it didn't happen this year. And I think a lot of Canadians are seeing that now when they go down. It's not a free place to go to anymore, which what they thought was. It's a very expensive trip. And then we were talking about this earlier, because now you start to think about, where else can I go?
Yeah, I feel like the new age traveler doesn't want to be stuck to going to the same spot every single year, where it's like there's Barbados and Turks and Tulum's on the up and up. So there's these other little places that are popping up that are, have an attractiveness in comparison to going to the exact same spot, doing the exact same stuff year after year. So obviously, when you're doing that, you develop a sense of community, which is always nice. You meet friends and whatever, but there's also an attractiveness of hopping around and seeing new spots.
Yeah, no, true. Well, if you have I think if you took your money that you've got your property down there and put it into something that maybe gets a return, and use that return as your travel fund, right? You see
That's
what I'm saying?
brilliant.
And that's how you do exactly what you're saying, Phil. Like, you can kind of buzz around, but that you create this fund that funds your travel, which is kind of cool. I think that's a great way to utilize real estate and go around and stuff like that. But it's an expensive proposition. This dollar is pretty huge, and even taxes in these, like, maybe not in Tulum as much, but again, if you're not from state of Florida, your municipal taxes are probably 2 to 3 times what a resident of Florida's are. So yeah, it's a big ticket, right? Totally.
Yeah, and there's more risk, right? You got to think, anytime you go outside of your backyard, you got currency exchange rate risk, then you got, government risk, you got insurance risk, you've got real estate risk, you got all these other risks to look at when you're buying outside of the country. So
yeah, and when you talk to people in the past that have done it, they've always said they only made money on the currency hedge, right? The hedge. So if these people are smart, they're going to take their money out at this rate. they could take that money, buy something up here, maybe in cash, God bless, in Canada in cash, and use the rental income to travel with, or buy anywhere else. But this is your time to cash out from the currency. That's where they're going to make their profit. That's where they're going to make their 10 points, right?
Yeah,
10 or 15 points.
I think there could be even more, because some of these people, if they bought like in the 2010, you were at $1.20, right? Like one US was $1.20 Canadian. Now we're over $1.04. That's a huge return on your money.
Just in currency alone.
Just in currency.
Yeah. And currency alone. Yeah. That's the cool part, right? Mm-hmm.
Good stuff. Okay, let's get into Conrad. Is there enough first-time home buyers in the market today to push this market up? Because that's what we're talking about and we're relying on, right? A lot of the 2025 market's going to rely on the first-time home buyers coming to the table. What do you think?
Well, yeah, you're absolutely right, and hopefully they have a lot of money from their parents and grandparents, right?
I think they used it all.
Yeah, I think it's all done. The cover. Look, what I've noticed. I was just in the U.S. at a real estate conference, and what's funny is they're saying that we're seeing less showing activity, right? So before, when a house, 15, 20 showings to get it sold, now it's very compressed. So the people that are out buying today can pull the trigger, so to speak, a lot faster. So they're making decisions a lot faster. So we're going into a market where there's, it's people cash in hand, and now, like, people buying today, especially with this looming tariffs and what have you, they're probably saying to themselves, like, I've got a great government job, or I'm not affected by the tariffs. So they're going in and they're buying and taking advantage of this market. And that's what's happening, I would say, pretty much all over the world with the uncertainty that's out there. But in the US, they hit an all-time low in sales last year, 4.2 million sales. Normally they would do like 5 to 6 million sales. They haven't seen this number since 1995. Wow. That's the lowest ever in resale sales. And, our numbers are, hitting those kind of, we're not at 1995, but we're a little probably in the 2000s, early 2000s in terms of ours. But I think the first time buyer that's got money and is backed is gonna drive this market, and those people that are confident with their jobs are gonna drive this market, and they're gonna take advantage of what it is today to buy a resale home.
Yeah, right? I think to your point, Conrad, like we were talking about it earlier, the first time home buyer is very well qualified right now. They have good jobs. Income has gone up substantially since I started doing this job. That's for sure. When I started working at the bank making 30 grand a year, I thought that was a lot. Now we see first time buyers making 6 figures, right? Well into 6 figures, very well paid, and they have significant savings. Like these first time home buyers, they know how to save money. The other thing though is they are a lot more mature though. They're not in their 20s now. They're in their 30s. They're in their mid 30s.
It's crazy. What was the stat? The average first time home buyer today?
Our average first time home buyer at the office right now is 37 years old.
Yeah.
First time home buyer, 37 buying their first home. But that 37-year-old, maybe they've been in the parents' basement for a long time or saving rent, but they've really saved up money.
And that's precisely what I'm saying. These people are armed and ready, right? They're very qualified in all,
exactly.
and they're able to make a quicker decision. Like, think about it. Well, Phil's the young guy in the crowd, but like Brian and I, when we were back in our 20s, like what the hell, 2025, with typical first time buyer, we looked past things. We didn't really, we kind of did by emotion. These guys are very business oriented. They
Absolutely.
got spreadsheets. They're
educated.
Yes, they're a great set of buyers, and like I said, they're making those decisions faster. They've got the money, and it's not on a wing and a prayer. So it's a really qualified first time buyer. Just hope that buyer pool is big enough, right? That's the question.
Absolutely. One last thing: mortgage brokers, real estate agents alike. We've made it through the last 2 years, probably some of the toughest years in real estate that have happened. Brian and I were giving ourselves a pat on the back, but for somebody who got into the industry in the last 2 years, it's almost like they learned the right way, right? They learned in some of the toughest markets, developed the amazing habits, and there's going to be better times ahead for our industry if you're able to continue to push forward and knock down those barriers and create those great relationships. From a broker owner's perspective, what have you seen in terms of your agent pool and the people that are continuing to push forward and through these challenging markets, right?
Well, I think, Phil, you nailed it. I think when you come into a tough market, you seem to, it's not like order taking. They always say, the 2021 was order taking. So if you caught in 2021, I think your head spinning because the market kind of ground to a halt, in the fall of 2022. So it was tough times, and you really had to get your brains. But if you got in these tough times, absolutely, because if we look back at the tough times, that was the 90s.
Right.
So
My dad, he talks about them every day. The 90s, the 90s.
the 90s.
Yeah.
Well, I'll tell you, it's the biggest group. Like if you look at any trade organization, like a real estate board, and you see their 25 and 30 and 40-year people and 50-year people. Well, I'll tell you one thing. What's interesting is that 40 and 50-year people is growing exponentially because these guys got in it in the 90s, right? You know what I'm saying? Like they're your 30 and 40-year people. They got in a real tough market. They were able to thrive during the 90s. And yeah, you're seeing that 25-year person and 35-year person growing and growing, because they came in a tough market, right? So
that's
that's
so
how
true.
and they learned the skills. And I don't want to say back to basics, but what I'm saying is they learned what I call the business of real estate. And I think that's, and it is a business. So those other people were just taking orders and going on the wave of the business. These people now that are getting in it today know the business like your dad does. And like he's instilled on you guys as well, the same type of thing. That's those same principles that got you guys where you are today were born out of the 90s, out of a terrible market. Right?
Yeah, no, I could see people on our team, right, who came in that tough market, and they principles, back to the basics, the hard stuff, right? The
Yep.
Getting back to doing the hard stuff, the not so fun stuff of real estate. And not seeing a deal for a month or 2 months, right? It's tough to do. It's tough to stay motivated, but if you're able to make it out of that, you got some headway, man. You got some momentum building into some of these better markets that are ahead of us.
Well, they say, tough times create strong people, right? And then the good times create the weak people. So you got to make sure that that you end up taking those and moving them forward.
But you got to remember, there wasn't that much noise in the 90s. It was like we didn't have social media like we have now, and the internet really didn't take hold till 2000. So information, but now you've got a barrage of information coming. People are on AI platforms trying to find out like what's the best time to buy and all that kind of stuff. It's crazy with all that noise that's around, and realtors are creating even that worse noise. It's beholden.
It's all for the clicks, and the views, Conrad. The clicks and the views.
All clickbait, right? So at the end of the day, the agent of the future is going to be someone that can, lead a path to good data, good information, clear that noise, and be a part of the conversation. And that's way different. And that's where people like yourself, Phil, that are really into this, and I know the numbers and things like that, but that's what's going to carry you through, because think about it. ChatGPT creates 100 billion words a day.
Wow.
So think about that for 1 minute. Okay, it'll take an avid reader 18,000 years to read that. What they do in a day. So think about all this stuff. So agents have to come up the middle, and your professionals like Brian and his people, and you got to surround yourself with real professionals to come up the middle, because there's a lot of noise going on, and people are making decisions based on false information half the time, right?
Yeah. Scary stuff. Okay, we'll leave it there.
Yeah.
Hey, Con.
Brian, okay, Brian, a quick question now. What are the rates now? What's the long term? Just give me the skinny.
So we saw the quarter point drop. Yesterday. So that's great. So so the Canadian Bank Prime 5.45 down to 5.2. You're still seeing 5-year fixed rates. They haven't moved up or down as of yet. You're still seeing the insured rates you can get still in the 4s, right? And then you can still get a good 5-year fix, conventional or unconventional, insured, uninsured, all those jazz under 5. So you're still seeing some really good 5-year fixed money. One thing to watch for, though, and this is where the banks start tinkering, is even though we see the variable rate starting to drop now, they start to mess with the discount. So you could see for a lot of buyers prime -1. So let's say, before the 5.2, it's 4.2. What the banks start to do is they start to say, we're going to give you prime -75 now.
5.
Or prime -50 now, or 0.5, right? So now you're like, damn it, right? So it's just to make sure that people are watching, because now this is where, those spreads are 100% up to the lender, right? They typically will adjust that, but just be on the lookout for that, because not every bank is creating their variable rate mortgage equal.
Interesting. Good point. Good stuff. That's cool.
What a show. I like what my dad's done here. He just brings on two people that are, way smarter, and let them talk, and we just hang out and listen and educate the good people that are buying and selling real estate today. So I appreciate you guys hopping on with me.
Thanks.
And
Thanks, Phil.
I love the show. I watch you guys all the time when I'm not on.
Awesome.
And so it's good. And anyone else who's watching, thanks for watching. So thanks again, guys. Take care.
Thank you. Thanks, guys.